Hello everyone, welcome back to this week's Technical Insights. Last week, we continued the earnings seasons and we saw some big names like Tesla, Coca Cola, and IBM reported their earnings. All these three companies reported positive earnings surprise towards the upside, and so were majorities of the companies that reported last week. The Nasdaq Composite Index also climbed to an all-time high on Friday, boosted by mega tech stocks who will be reporting their earnings this week. But the Dow Jones Index and the S&P 500 ended last Friday trading day lower. The Dow Jones Index dropped 259 points on Friday, or 0.61%, to close at 42,114 points. Broad Index S&P 500 inched lower by just 1 point, or 0.03%, to finish at 5,808 points. Tech-heavy Nasdaq Composite added 103 points, or 0.56%, to end at 18,518 points. On a weekly basis, both the Dow and the S&P 500 ended their 6-week winning streak. The Dow Jones Index lost 1,161 points for the week, or 2.68%. The S&P 500 fell 56 points for the period, or 0.96%. But the Nasdaq Composite Index added 29 points for the week, or 0.16%, for a 7th consecutive weekly gain, boosted by the tech stocks ahead of their upcoming earnings. Nvidia added 0.8%, and shares of Meta Platform, Amazon, and Microsoft were also higher on Friday. Tesla was a star performer last week as their share price surged 22% after higher earnings ended their streak of disappointing results. Tesla shareholders cheers the beat on the earnings per share and the higher gross margin, in addition to the news that Tesla's cheaper electric vehicle is on track for production next year. CEO Elon Musk also added fuel to the Tesla rally, saying on the earnings call that Tesla volume growth could be 20 to 30% next year. Most analysts surveyed were expecting a delivery growth of only about 15% for the year of 2025. Some of the most bullish analysts also doubted Elon Musk's forecast, even after assuming Tesla can roll out a cheaper version of its EV. Their view remained at a more reserved growth of 10 to 15%, as the promise of the full unsupervised FSD system could still be years away because of technological and regulatory hurdles. In Asia, Hong Kong stock edged higher on Friday. The Hang Seng Index rose about 100 points, or 0.5%, to 20,590 points, reducing their weekly loss to just 1.03%. The Hang Seng Tech Index gained 54 points on Friday, or 1.21%, to 4,538 points, trimming their weekly loss to just 1.37%. In an encouraging sign for the Chinese economy, residential housing pre-sales for 30 key cities in China rose by 22% from a high base in the previous 7-day period. First-tier cities led the increase across the country, with sales rising 27% last week, and in the previous week, nationwide sales also jumped 58% week-on-week. Given Chinese policymakers' resolve to save the property market with a slew of strong new measures announced since late September, I believe China home buyer confidence in the property market has improved tremendously, and we can expect monthly industry sales in the fourth quarter to register a year-on-year growth. UBS had last week raised its forecast for China growth in 2025 to 4.5% from 4%, citing better than expected third quarter growth and the effect of recent Chinese government stimulus package. Back in Singapore, our STI Index ended the trading week on a negative note. Our benchmark index was down 11 points, or about 0.32%, ending at 3,593 points. For the week, the STI lost about 46 points, or 1.29%, giving up much of the 1.86% gain that we saw in the previous week. But year to date, the STI Index is still up slightly more than 10% and is now 59 points away, or 1.65% away, from the year-to-date high of 3,652 points on the 24th of September last month. SATS was the biggest winner on our SCI Index last Friday, ending up 7.22%, or 27 cents, to $4.01. So for this week's technical analysis, let's look at our in-flight caterer, SATS. Last Friday, SATS share price jumped 27 cents, or 7.22%, to close at $4.01. For the week, the share price rose 26 cents, or 6.93%, adding on to last week's gain of 3.31%. We most recently covered SATS on the 14th of October video right here. You can click on the link around this video to rewatch that episode. Restating our view then from the previous video, we believe that SATS share price is likely to continue its uptrend, and investors looking at SATS can consider the then 50 days moving average in blue, then at the $3.53 level, which will be the first support level for an entry. And the next support level will come on the 15 July high over here, which is a resistance turn support level at $3.35. For near-term target, the first resistance would be the current year-to-date high at $3.84 over here, with the 12-month analyst target price at $4.04, making the $4 handle here a strong resistance level to watch or take some profit off the table. So you can see that SATS share price has actually touched a high of $4.08 last Friday, above the 12-month average analyst target price, and retraced back closer to the $4 handle of $4.01. This is the handle and the resistance level that we have been looking out for, given that SATS will be releasing its second half financial results on the 7th of November. I believe most of the upside towards the 7th November business update has already been priced in, and we will need a result that's much better than analyst expectation for this rally in SATS to push higher. Looking at the chart, the primary uptrend that we see from April this year is still firmly intact, meaning we can see a continued formation of higher highs and higher lows. Indicator-wise, the MACD turned positive last Friday after the massive jump in SATS share price, indicating that the uptrend will continue for now. The latest RSI reading on Friday was at 73, above the 70-point overbought level. But the highest level on the RSI reading that we observed in SATS this year was recorded at the 85 points level, somewhere around the 15th of July. So the RSI may still have some room to move up further to the 80-point level before we start to see a technical pullback in the share price. So with the indications from the indicators and the 7th November earnings update in sight, investors following up on SATS can use the 20-day moving average now in green, which is now at the $3.73 level as the first support entry level to load up on SATS share price again, with the next support level at the 50 days moving average in blue, now at $3.66, closing in on the 20 days moving average as well, giving more support to SATS share price. For the near-term target, the current 12-month analyst target is now at $4.14, with the higher end of the estimate now standing at $4.40. So these are the updates that I have for you this week. I hope you do find this information useful. So do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insight.